These 5 things are looking really good for Tesla stock. Number one, Deutsche Bank adjusts Tesla's price target to $250 from $220, maintains a buy rating. Tell me you work for a German company without telling me you work for a German company. Smells like typical German bureaucracy by adding maintains a buy rating. And you will really want to stick around for this one. Everything expressed below has been shared by Tesla employees, although we must legally note this does not represent the company. Some juicy details in there. We're gonna come back to that. Let's cover the Deutsche Bank note first. The analyst is excited about a lot, but the main 4 things are the lower cost trajectory of a next generation platform potentially targeting $20,000 in cost of goods sold per vehicle. We know Tesla wants to reduce cost of goods sold by 50% using the next generation platform. And if we use Sandy Munro's numbers, actually, this analyst might be quite conservative. If we take the Model 3, for example, and if we divide this estimated cost, then we should get a number that's actually under $17,000. Now, the 2022 Tesla Model Y is significantly above that, but keep in mind the Model Y has quite a few features that Model 3 does not have. For example, the Model Y comes with a HEPA filter that can activate the bioweapon defense mode. And that Model Y is all-wheel drive, while the Model 3 is rear-wheel drive only. So if we go with Tesla's numbers and assumptions, then the analyst is going to turn out to be quite conservative here. Then he is also excited about specific vehicles and segment launches based on next generation platform and their timelines. And then check out number 3. He is talking about robotaxis, actually. That's quite interesting that an analyst actually is even considering that. And then number 4, capital allocation framework with share buybacks. All in, we believe that increased clarity around the long-term trajectory for Tesla's global operations, volume growth, and especially scale and cost of Tesla's next-generation models could reinforce the bull case for the stock, the analyst concludes. The next thing that is looking really good for Tesla comes from Morgan Stanley, specifically about gigacastings. We know that gigacastings turn hundreds of parts into just one part. Elon Musk has stated multiple times that manufacturing will be Tesla's key long-term sustainable advantage. Creating the system that manufactures the product is, according to Tesla, far more complex than creating the product itself. But the question is, why don't other companies use giant castings just like Tesla does? We had the opportunity to speak to a senior body shop engineer of a major global OEM about Tesla's GigaPress and why other traditional OEMs are not prepared to move in this direction anytime soon. Here are some key takeaways. Number 1, difficult to integrate into existing body shop. Just because it's difficult doesn't mean you shouldn't do it. You should. They should do it, but they are not doing it. The process eliminates the use of much of the advanced tooling, welding, riveting, bonding, and robotics currently in place at legacy OEM body shops. So you don't want to throw a thing that is supposedly good, but actually when we compare it to the new technology is sort of trash because it could put you out of business, and yet you're refusing to move on and adapt. This is how companies go bankrupt. Flexibility for body shape. Traditional OEMs offer a wide variety of body shapes and configurations across their brands. I understand this point. This point actually makes sense, but this only goes to show you how important it is to have as few models as possible, which is exactly what Tesla is doing, because this will provide a much higher profit margin for Tesla, and the Model Y will be the world's best-selling vehicle by volume, not just by revenue. And gigacastings will be a big part of it, requiring lower production runs per nameplate and the need to change tooling dies in a conventional stamping operation. They believe a gigapress is designed for far higher volumes of one body style platform configuration. They might be right, but their business model is built on this huge fundamental flaw. To all of these big executives, I would strongly recommend, and I'm serious about this, to watch the 3 little Pigs and the Big Bad Wolf. It has a good lesson on how to build a good foundation for what you are doing. Oh, and this next point is just so ridiculous. Reusability culture and other. Legacy OEMs are trying to convert existing ICE capacity to accommodate new EV production. In doing so, they look to reuse as much capital equipment and tooling as possible. Converting to a gigapress would essentially involve gutting the existing body shop and starting from scratch. And they don't want to start from scratch. They just want to do what they did before, which unfortunately is going to lead many of them to their demise. This is actually bad news for GM, which is the next thing that is looking really good for Tesla. General Motors said on Thursday it will halt production at its Fort Wayne assembly truck plant in Indiana for 2 weeks from March 27th as inventory starts to outweigh demand with the easing of supply chain snags. Some people say that Tesla has high inventory. But look at GM inventory. Total GM sales during Q4 2022 increased 41% to 623,000 units. All right. Tesla is not too far away from that. GM ended the fourth quarter with 410,000 vehicles in dealer inventory. Imagine if Tesla ended with 200,000 vehicles in inventory, so just half of what GM did here. Everyone would lose their minds. We have some insider footage of what is happening at GM. And there is more. Lordstown Motors Corporation will temporarily stop production and deliveries of its pickup truck Endurance, of which it has only made 31 units for sale, the company said, citing performance and quality issues with some components. It appears that competition is dying, but remember, zombies can still walk. They can still be dangerous, so we should still watch out for them, but just saying, they can still do some damage. I mean, for example, take a look at what Gary Black is saying about Lucid, who, you know, is going to compete seriously with Tesla. Listening to Peter on the Lucid earnings call is like listening to the tour guide on an ocean liner about to hit an iceberg. See? They can still do some serious damage to the iceberg. These are good times. Good times. On to the next thing that is looking really good for Tesla. Keep in mind, this is shared by Tesla employee. Of course, this is not actually official. And they are really teasing a big announcement at the end of this thread. But a few details first. They are saying that hardware 4, which will improve full self-driving and autopilot, should be delivered and included in every vehicle by the end of the summer, including those made in China and Berlin. But Tesla has already started upgrading the resolution of cameras silently starting in late December 2022. We all know about the Model 3 redesign, Project Highland, but here we are also hearing about a redesign for Model Y, although that's sort of expected. The Model 3 and Y will receive a handful of exterior and interior changes, including new mirrors and a tri-band GPS, allowing Tesla to eliminate the need for various sensors, including external temperature. Many other refinements are underway, although can't speak to this right now. So it sounds like, again, reducing number of parts, simplifying production. This is what Tesla has always done, and that will reduce the costs eventually. And you know, I always try to keep my expectations low for the events, but this thing, I don't know. They are saying to end this thread with a bang, Elon Musk will make one of the most significant Tesla announcements in many years at Investor Day on March 1st. Whether attending in person or watching the stream online, you will absolutely want to clear your schedule. My favorite cat, as you know, I'm a dog person, but this one I like, looks excited but also upset at the same time. And they are saying the surprise was already ruined for us, but it will be worth the wait for everyone else. That sounds like extreme certainty to me. And I'm trying to look for hints, but there's nothing. Nothing. No hints. Nothing. I'm still trying to keep my expectations low for the investor day on March 1st, but that tweet is getting me a little bit more excited. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.